There are two main principles when it comes to investing. One is to invest for cash flow, and the other is investing for capital gains. In this video, I'll be going over what they are, some examples of each, the pros and cons of each method, and how it may apply to the New Zealand economy. The basic definition of cash flow investing is obtaining and holding onto an asset for the long term in order to obtain a regular income source from those assets. Examples of that include income from rental homes, dividend payments from owning company shares, and interest from bank deposits or lendings. The main goal of this strategy is to build up returns over a long period of time. This type of investing is good for retirement, building up capital, and achieving financial independence. What I mean by financial independence is when passive income from those assets become greater than your expenses. Now, I have a video on that subject, which I will include in a link above. It's useful to think of investing for cash flow as an investment for the long term. It is not simply a buy and forget investment. You have to do proper research beforehand. Ideally, you would look for real estate or companies that are sustainable for the long term, or at least long enough to cover your initial investment. Let's look at the two main assets for cash flow investment. Number one is dividend share investing. Now, the most important thing to look for here is whether the company has a large enough cash reserve so that they can afford to pay out the dividends. Look for long-established leaders of a sector that has a long history of paying out dividends. It is important to be aware that companies may reduce or eliminate dividend payments in poor economic conditions. High-growth tech companies also tend to reinvest their cash back into growth of the company, so they tend to have zero or very low dividend payout. Historically, New Zealand companies have been paying out quite high dividends compared to overseas companies. For example, Air New Zealand has a dividend yield of around 7%, while Spark NZ has a dividend yield of around 5%. If you are unsure of which companies to pick, it may be worth investing in a dividend fund on an investing platform such as InvestNow. Now, I'll include a link to a video detailing some of the investing platforms. The second common asset in cash flow investing is real estate rentals. Consider the area where the property is and how future developments may affect the desirability of the property. Location is everything when it comes to real estate. A good location means that the property can increase in value over time and it will be easier to find tenants. So let's look at some of the pros and cons of cash flow investing. So for the pros, generally it's less risky than capital gains investing because you don't really have to time the market to buy and sell your assets. For the cons, real estate may depreciate in price depending on the location, and company situation may change, causing a drop in the company share price. The second con is that it may take a long time to get your principal investments back. The second main investing principle is investing for capital gains. Capital gains investing is essentially buying shares or properties or any other forms of assets at a low price and then selling again when the price is higher. It's pretty much the age-old saying of buying low and selling high, or just flipping items. The main goal of capital gains investing is to find assets that are undervalued in the market. This form of investing is good for people that are highly knowledgeable in a particular area, whether it be companies, real estate, or even vintage coins. Alternatively, it is also suitable for people who have the ability to increase the value of a particular asset, such as fixing old cars or houses. For any form of capital gains investing, it is also really important to do plenty of research before actually buying the asset. Now, let's look at capital gains investing in terms of companies and real estate. In terms of investing in companies, it is important to have a solid understanding in the fundamentals of a company to avoid speculating on unknown companies. I have a video on how to pick out a good company based on its fundamentals, which I will also include in a link above. For investing in real estate for capital gains, location is again key here. You simply cannot count on real estate to always increase in value. Look at the surrounding neighborhood and look at where the new developments are occurring and plan your investments accordingly. A reason why capital gains investing is so popular in New Zealand is because New Zealand is one of the very few developed countries that has no capital gains tax. This means that you don't get taxed on increases in share price or real estate to a large degree. The pros of capital gains investing is that you can make a profit in a relatively short period of time compared to cash flow investing. And also, New Zealand has no capital gains tax at the moment, but this may change in the future. The cons of capital gains investing includes that it requires a significant amount of research or expert knowledge and is typically more risky than cash flow investing. Cash flow and capital gains investing are not mutually exclusive of one another, so you could realistically do both at the same time. Due to the fact that cash flow investing tends to be less risky when compared to capital gains investing, it might be a good starting strategy for beginners to investment. It is very easy to set up an account on an investment platform and put in a few $100s. Just keep in mind that returns may not be very significant unless you consistently invest into the account. On the other hand, if you are still young, you might be able to take up more risky investments for capital gains, since you will have a longer period of time to ride out any economic downturns. In either case, it's worth trying out both types of investing methods to see which one fits best for you. I hope this video has provided some useful information for you. Check out my playlist on where to invest in New Zealand, and I will see you in the next video.